Good morning, everyone, and welcome to another episode of The Early Bird. Today is Friday, 5th of February, 2021. It's a little bit of a slow news day, so all I have for you guys and girls are just one item. So, from this article, it's saying that the energy retailers is having pressure put on them by renewable energy, and the shift towards renewable energy. So you can see that there's definitely a downward trend for the share prices for AGL, and this happened way before the pandemic. You can see this was June 2018 when it hit its peak, and the prices just keep on dropping. Same with Origin Limited. So around 2019, or even a little bit earlier, there's definitely a huge drop in share prices. Then it picked up, and then it just crashed back down, and there's an expectation for it to keep coming down, so it's definitely a downward trend on these companies. The reason is that the energy prices are getting cheaper, which is affecting the bottom line. And now, if for those who are holding on to these shares or these companies, I would recommend just reevaluating the whole situation in terms of what are the company's strategies going forward with this whole situation, and the competitors and the wider market. And the same advice go to those who look to bottom fish. Personally, I would not, just because it looks definitely like there's a downward trend, and it's just I would definitely wait until I know what's happening. You can see that the profit has dropped since the peak. So there's the profit for AGL. It was sitting at 1.5 billion at the highest, and then it dropped down to 1 billion on the last earning report. And same pretty much for Origin. There's a reduction in net income. What I would do is wait to see if it picks back up, and before I actually jump in and buy these companies. I believe they do have dividends, so that's probably what's key, that will kind of like stop them from kind of like falling further. But dividends is really taken from profit, so reduced profit will mean reduced dividend, and they can't continue to pay a high amount of dividend if their profit is reducing. So there's those factors to also consider, and if they announce that they are reducing the dividends, then that might suffer, the share price might suffer even more. So from reading this, it seems like if any of you bought it from a lower price than now, probably a good time to take that profit out, or even just take out the initial principal and see how the ride will go. Or those who bought from the top, I would definitely reevaluate and see if you need to cut your losses. But yeah, again, not meant to be financial advice. We're just kind of reviewing the news and kind of see how it affects the share prices and our investing and trading. Anyways, that's pretty much it for today's episode of The Early Bird. If you have any comments regarding this particular topic, please leave it in the comment. If you like what you see, share, like, and subscribe. And there are other videos similar to this. There's also the quick take videos where I look at a company in less than 20 minutes, or within 20 minutes or so. So maybe you guys will find that interesting. So yeah, check out the other videos, and thank you so much for watching. Have a great day. Bye.